Let's pick up on the markets now. The local index facing green screens in Asia and U.S. markets this morning. It comes after a rough day yesterday, which saw Naspers and international subsidiary Prosus taking a beating. Carmen Mpelwane, portfolio manager at Absa Asset Management, joining us now to talk us through some of the market moves in early trade. Carmen, good morning to you. Your quick overview of how the markets have opened at the JSE.
So very start to the week yesterday. A lot of pain. Obviously, as you've mentioned, Naspers and Prosus led that down. Both were down over 16% yesterday. We are seeing some recovery this morning, albeit it hasn't recovered back to what it was before. This largely on the back of the maintaining of the Chinese leadership, and that has come through. However, we did see the US overnight stayed quite firm. And we also saw some dollar weakness. So this morning, as you mentioned, we've seen a lot of green on the JSE, up 1.11%. Naspers and Prosus have gained a little bit, but haven't fully recovered. So I expect that the plethora of US earnings that are due to come out today likely to give some direction later in the day as well.
Let's talk about jitters over China, which have wiped 432 billion rand off the value of Naspers and Prosus, Carmen. What is going on here?
It's lots of concern, and mainly from foreign investors if you look at the movements yesterday. So a lot of them pulling out of China. The Hang Seng index down the most since 2008, and that was when we had the global financial crisis, to give you a comparative. So I think there is lots of concern and reduced faith in leadership and their hold on the economy. So with them staying in power, I think there's concern that we will see a lot more pain coming out of China. We continue to see China operating in a significant COVID lockdown environment. And that continues to have a hold on the economy. So my guess is that the investment market is looking at the fact that things are unlikely to change, and they're likely to remain as tight and constrained as it was before.
Yeah. Let's then look at locally. All eyes will be on the finance minister tomorrow when he tables that all-important medium budget speech, which is likely to show fiscal consolidation. What would you like to see happen there?
Yes, I think a lot of it will be overshadowed by global and macroeconomic risks at this point. As you've mentioned, it's definitely to the positive. So revenue collection is likely to supersede what was forecast earlier in the year. And I think expenses at this point is largely underperforming. Having said that, what we are looking for is some direction in terms of the public sector wage demands and the agreement around that. That'll have a significant impact on expenses going forward. Then also to look at what kind of support there will be for SOEs, and specifically Eskom and possibly Transnet at this point. And then I think thirdly is also in terms of the social grant, whether this will be extended, increased, or reduced or halted, and that will also give some direction in terms of expenses. And I think lastly, the community is going to look for any progress in terms of the infrastructure and I think it's the Operation Vulindlela, and what the progress is on that, which obviously reads through in terms of growth and medium-term growth for South Africa. So those are the key items to keep an eye out for, and hopefully we'll move in the positive direction.
Carmen Mpelwane, portfolio manager at Absa Asset Management. Thank you very much for